Hey guys, hope you are all having a great day. We finally saw green today, a color forgotten to my eyes. Though I don't think we are set to necessarily move back immediately to where we were before this market correction, I do find comfort in meme stocks showing some force today. The media has been calling meme stocks dead because of their fall from grace from where they once were, completely and willfully ignoring that the entire market has been slipping. Today we have quite a bit of news and important developments to go over, some which are incredibly bullish. I want to invite all my viewers to my Discord, which will be linked below. We are having tons of important conversations about the market and investing that would be very beneficial for all to have. Some people did not have access to it when they attempted to join, but I fixed that problem, so everyone should have access right now. Join the Discord to be part of the coolest meme stock and trading community out there. Before we start, let me quickly state that I am not a financial advisor, and that all content discussed in this channel is simply information gathered that I deem important for people to know, so that they can make informed decisions. All efforts are aimed to better understand the nature of the current market in anticipation of the greatest squeeze in financial history. Let's dive right in. Do you remember when Jerome Powell tricked us and said inflation is transitory, a statement that has become a rampant meme across investing communities across the web? We knew back then that inflation wasn't transitory, a statement that garnered me a lot of hate in the comments back when I opened a disagreement against such an asinine opinion. More and more people are coming to accept what I once foretold, that inflation was going to be permanent, and that its vast negative effects are going to be felt for a long time, and I mean years. Chief executive of the world's largest fund Nikolai Tangent thinks inflation is rising across the board, citing IKEA increasing prices 9%, with food, high freight rates, trucking rates, metals, commodities, energy, lumber, and gas appearing to have no ceiling by which prices can't continue to grow. Tangent said that with extremely low interest rates and a very high stock market, and with increasing inflation, it is very likely we could endure a long period of time with low returns, and I agree. I mentioned this because Norway's $1.3 trillion fund plays a huge part in the financial markets, accounting for 1.4% of all world's listed companies. The comments by Tangent are not to be taken lightly, and foreshadow bad things to come for all markets as inflation continues to pummel everything down. We have talked about the Fed, which is believed to be planning to have around 4 rate hikes this year, with the first one beginning around March. Well, analysts at Bank of America disagree, thinking that the Federal Reserve will hike interests at every meeting for the remainder of the year, which means they think the Fed will raise rates 7 times this year. Bank of America's economist Ethan Harris projects quarter percentage point rate increases in 2022, putting the target range somewhere between 2.75% and 3% by the year's end. Obviously, this will weigh heavily on the economic growth projected for 2023, so what I will say to you guys is that whatever data any analyst or economist gave you as an outcome for the economic output the US will have for next year, recalculate your expectations and update your sheets because those numbers are going to be significantly down. This goes along the same sentiment Tangent said, where inflation will affect the growth the markets are going to see. There is no way that even with this correction do the prices of the stocks represent the value of the companies. Everything is way overpriced, which is why I think it very likely for us to start a recession this year if there was one to be had. But guess what else? It wasn't only Bank of America adjusting expectations on rate hikes this year. Goldman Sachs has just recently changed their projections to 5 rate hikes and Deutsche Bank also putting it at 5 hikes. TD Securities still believes there will only be 4 rate hikes. What I want to drive to your smooth brains is that right now, you should not have any fixed expectation for anything to happen. We are officially in uncharted territory, and as we march forth, we are going to have incoming data that changes assumptions all the time, so try to take a stance on the situation with an evolving outlook towards the markets. We are literally going day by day on this, so don't set yourself up for failure by arrogantly burying yourself into any expectation. Now, on to today. The biggest finding of all came from a user in SuperStonk, who showed that over 300,000 shares suddenly became available to borrow, coinciding perfectly with the 300,000 shares worth of puts. Let me try to explain how this works in the most simplistic way for the smoothest of brains out there. What shorters are doing is they are riding deep out of the money options and selling them. They obviously make profit with the premium they get. Then they sort of front-run the transaction by allowing themselves to assume that someone will exercise such contact and sell them 100 shares at a particular date. Shorters though, assuming this will happen, come and uses those same shares to short the stock and then close when the option contract closes itself. I have made a ton of videos on this around summer last year. They literally gamble on stocks with shares they don't even have through option contracts that are well hidden and out of the money. Good news is that long term, all 300,000 shares need to be purchased back, and though they simply keep on passing off the date by which they buy back, or cover, eventually it all comes to a halt and they buy back. Remember, this is only a way for them to add shares without actually creating them. They are accounting in the future for the availability of shares and transactions and running their operations on the assumption of things happening, which is crazy. It's like if I wanted to kiss you, but I'm too ugly to kiss, so I know I have to pay, so instead of me giving you the money, I just simply kiss you up front and tell you at some point I'll give you the money. Unbelievable how much power and influence these institutions have, and I don't blame them for doing it. I put all the blame here on the government for the lack of care and oversight. Brokers too are to blame, since I also think they are telling their customers they have a certain amount of shares without actually having them, which is why when people started transferring out of TD Ameritrade, for example, the broker would tell them they didn't have enough GameStop or AMC shares to transfer. It's all empty promises, but again, the good news is that they have a responsibility to pay us our money whenever we sell, so as disgusted I am looking at this new 300,000 shares that will be used to suppress GameStop, I am relieved by knowing this can only help MOASS go up higher. As for AMC, Goldman Sachs apparently sold 25,948 shares of AMC from one of their small-cap ETFs, but then added 364,863 shares to their large-cap ETFs. So much for a stock being dead when one of the biggest institutions is buying and slapping the ask without care. I think this was done to hedge their overall position in the markets. You see, they know that AMC, and GameStop too, will be shorted and go down in the short term, and as a way to hedge against this negative predicament, they put them in a large-cap ETF in order to balance out their losses and how they look on the sheets. Funny enough, on my Discord, I have been advocating for the same strategy in order to protect portfolio. I have added tons of blue-chip stocks and other safe stocks with great potential to hedge against a bleak short-term future where my GME continues to go down. I want my overall account to no collapse, and I believe Goldman Sachs is doing the same. Overall, these two news are bullish long-term, and once again prove to the media and all the clowns who believe watch them that big money is indeed very interested in GME and AMC, and that these two stocks are not going anywhere for a very long time. Let's now talk about today. The Fed submitted over $1.654 trillion in reverse repo operations today. Dark pool trades for AMC accounted for 55% of the total volume today, while dark pool trades for GameStop accounted for 57% of the total volume today. AMC had a larger amount of buy orders than its sell orders, with GameStop also having a larger amount of buy orders than sell orders. Now, let's talk about performance. AMC traded bullishly, gaining over 6% for the day. It began trading pretty bearishly during the free market, dipping down to 14.70 at 1. Upon market opening, AMC started running up, and after a quick retracement due 15, it ended up moving up to 16.25, the high of the day. After reaching this peak, it retraced, and continued bouncing on the VWAP for pretty much the rest of the day. AMC closed at 16.06, above the VWAP. As for what to expect for tomorrow, I still want to wait a couple more days before giving my thoughts as to what is most likely to happen. Though today the market wasn't as volatile as the days we experienced last week, AMC is still coming off a pretty steep fall, and market conditions still remain unpredictable since there are so many catalysts coming up this week. If we do fall, I think we are likely to find support at 14.87 and then at 13.40. If we continue running up, resistance will be met at 16.60 and then 18.15. I find it most likely for us to consolidate and then start going down again to test support. Remember, through options, they have AMC priced in, and shorters are going to stab it over and over, bleeding it out as much as possible. GameStop traded bullishly, gaining over 11% for the day. It opened to a quick run that took it from 98 to over 105.50. After a quick retracement, GameStop continued moving up for the rest of the day. It reached 109.82 as the highest price of the day and closed at 108.93, above the VWAP. GameStop is incredibly difficult to anticipate. So far, if it is mean to really get out of this dip, it needs to run past 119. If not, this will be a run that will be noted as being lower than the previous one, and we would be very likely to retest 195 as support walls. I have no idea where we are to go this week or what is most likely since there are so many catalysts this week with the stock market in general, so I will just say buy if you can and hold. I got myself 6 shares of GME today, and plan on buying more if and when we go under 95 again. Please join my Discord, there are almost 3,000 people in it, and we are all having fun. There are tons of people talking about GME and AMC, having a good time and holding interesting conversations about theories as to what is happening. And that is all I have for you guys today. Thank you all so much for making it to the end of the video, and don't forget to come on over to my Discord. Let me know if you bought today's dip or if you were waiting to see if it falls any further. Thank you all for the love and support you have shown me. I hope to see you tomorrow on the next one. If you want to support this channel, I have a Patreon link in the description as well as some one-time donation links for Cash App and PayPal. Thank you again for being a part of this channel. I will continue striving for better content. Enjoy the rest of your day, keep on buying the dip and to the moon.